This is our daily forex blog for December 17th, 2010. The euro dollar has a weekly and monthly trend that's down. You might have looked for some sells at the upper containment bands. Trend reversal signal here. This one pulled back 25 pips. This is an even better trade, even though it didn't pan out because there was even less strength on the way up than before. And then when the market goes up again, you draw your fibs on that last wave. And you have these Fibonacci profit targets to look for counter trend trades at, and the Fibonacci levels that I draw. Spend about 45 minutes to an hour every night doing multi-day, multi-week and fib analysis, so that automatically shows up in your chart. And the market was losing strength as it was going up. Very high probability trade given the fact that the monthly trend's down, and for the most part last night the weekly trend was down. It just had shifted up at 3. Once that fell underneath the support area and went sideways, pretty decent trade here. This is your likely profit target. Once the support area gets broken like that, right here, breaks underneath there, you can go short on this retest or this retest, and then you have the fib levels of this huge trade as potential profit targets. And this market was so weak, notice the explosive move right here, that this is called our trend explosion system. Usually plus 20 or minus 20 trends or higher continue, and this one did, in the direction of the weekly and monthly trend, of course. Here's a perfect example of just a sideways complete rectangle pattern, and you have the weekly and monthly trends down. It's stalling at the previous day's high, can't get above it. You might want to look for going short here. Now you might have got tricked into a trade here and lost money, let's say 5 to 10 pips, 5 to 10 pips, and then the market took off and you caught about 60 pips on the way down. So even if you took both those trades and lost 10 pips each time, then made 40, you're up. And notice extreme weakness on the way down, very little strength on the way up. The daily, weekly, monthly trend are all super, super weak. This is basically our method. You wait for a pullback and you look to short there. And you got major areas of support down there. I would have got out of this trade right here. Anything underneath the lower containment band is not likely to continue. And the farther it goes underneath the lower containment band, you can pretty aggressively look for counter trend trades. When these fib targets get hit, you might have got into a trade down there. It's very likely to continue up, being Friday afternoon, low volatility. It's not the best risk versus reward ratio, though. This one has a daily, weekly, monthly trend down, and you have an NR breakout last night that worked. Didn't have that much weakness. Anytime currencies underneath the lower containment band, previous month's lows right here, fib target of this move is right there, very likely to stall out when it's underneath the lower containment band. If this double bottom right here had less weakness than this would have been a great place to buy. The market exploded up. Because the longer term trend's down, you might have looked to sell here around the hourly. That trade didn't pan out. And because of the extreme weakness over the weekly and monthly trend, I really would not have taken any trades in this on the long side until it went back above the previous day's low right here. Pulled back. It had extreme strength at that point. It's above the hourly. You give it a shot here with our trading zones and fib level up here as a likely profit target. You also draw your fib on this move right here, and I probably would have got half my trade right there, moved my stop up underneath these lows, and then when it took off again, any sign of weakness up here, I'd get out of the second half of the trade. So that was the only long I would have taken in this particular pair. Daily, weekly, monthly trends down, so when it's underneath the hourly, you're looking for sells. When it's above the hourly, you're looking to buy. However, the weekly and monthly trends down, so you're not looking to make that much on the long side. You got major resistance here, here, and here. So, and there's no statistical strength on the way up. So really the only trade that I would take on the long side of this is after it exploded up here to our fib level. Notice the selling at my projected fib level. The pullback had no weakness. This is our trend explosion system, and this shot up about 40 pips. That's the only trade I would have taken on the long side. On the short side earlier today, when it went up to the hourly and failed, I might have gone short right here. Didn't pull back that much. We might have broke even or lost 3 or 4 pips on here, but I wouldn't have taken any of the other trades because the longer term trend's down. Even though the trades worked, it's all about the probability of the trade working and the likely profit versus your risk. And with all these resistance areas above, with the longer term trend being down, I wouldn't ever take those kind of trades. This one, the daily, weekly, monthly trend's up. It got stuck between these fib levels. Once it failed to find support here at this fib level, even though the longer term trend's up, this trade right here is a pretty decent trade. Or when it breaks out through here, looking for a sell. Once you have extreme weakness like that, you might have also sold right here. You got all these support areas underneath that are likely to be buying. The market came up here and did a retest. Keep in mind it's underneath the hourly, so more likely to go down. On the way up here, it had less strength than it had weakness. Not a bad trade there and there. Keep in mind you're fighting the longer term trend, so anytime you take these kind of trades, look to get out at the fib targets. You know, if you sold right here, this fib target's right here. It doesn't have that much statistical weakness. Don't be greedy. Take, you know, even if it's only 10, 15 pips, take that and be out. New Zealand dollar, perfect example. We have a weekly and monthly trend that's down. Earlier last night it went up and hit our fib levels. When midnight happens, we reshift these over here to the right. I do these every night at like 5 or 6. That gray level would have shown up there last night. You can see it double topped right here with very little weakness. Great place to go short because the longer term trend was so weak. And you have a narrow range pattern right here. You might have gone short right here, lost. At that point, I usually wait for it to break out underneath the low before getting into it again. That trade made about 15 pips, so you lose 10, make 15. Then it comes back up and does a retest at this resistance area. It has a lot of strength, so I would not have sold this here, most likely. But if you did, wait for it to go underneath that consolidation. This is your first profit target. This is your second. It's not that weak, so you might have got out of your trade here. Because the longer-term trend is weak, however, but not the real time, wait for this to get broken and go short again, and that was a pretty decent trade. Pretty high probability, and the next area of support's all the way down here, which it didn't hit, but you use this as a profit target. Euro yen, the daily, weekly, monthly trend's just slightly up. You can see the real-time strength isn't that much. If you want to get short at a fib level when it appears it's not going through it, or you know, might have waited to go short right here, you would have lost 10 pips, gone short again right here when it breaks down underneath the previous day's high. This is a false breakout up, very likely to reverse. And here's another retest of the hourly. Anytime the hourly gets broken from above to below, comes back up and can't get above it, you know, you look to go short right there, and you have your fib targets of this move, plus the overnight fib level, which in this case did not hold, and the price just exploded down through everything. So if, you know, in some cases these counter trend trades lead to some huge moves, 100+ pip move. Now normally you'd look to sell down here because of the extreme weakness, but it's underneath our lower containment band, and previously the weekly and monthly trend were just slightly up. It doesn't, you know, the reward doesn't justify the risk in shorting underneath the lower containment band in this case. So you would do nothing. You might look for the weakness to stall out and look to buy down here even. This one's also a great example. Weekly trends down, that's the primary one we focus on, and it's stuck between the monthly pivot and this fib level. So once it finally breaks underneath that level, you go short, and you got this as a potential profit target. This is too. It's not that statistically weak. You made, you know, maybe 20, 25 pips, and then when it does a retest and can't get above here, you go short again, and the market just kind of collapses. Now I would have got out right here near the lower containment bands because it wasn't that weak. I would have missed this remaining 40 pip move. But you can also, every time it makes a lower low and consolidates, yank your stop down above the highs. That is a valid method, you know, and you'd still be in that trade if you did that. Australian dollar, the daily, weekly, and monthly trend was up, so you might have been very cautious in selling this. If you traded that, you lost. The second time it broke down underneath that level, you have the previous day's low right here. That's one of the reasons why it didn't work. Mainly the weekly and monthly trend's up, but you also have the previous day's low right there. Once it breaks underneath the previous day's low, it's pretty likely to go down, but you know, draw your fibs on there, and if it stalls out at the fib level or doesn't have that much weakness, when the longer term trend's up, you know, look to get out down there. It's just common sense. Here, the daily, weekly, monthly trends down. It's kind of chopping around. You might have sold right here because the next profit target's all the way down here, and it just went sideways. Usually I get out of a trade 30 minutes, an hour and a half if it goes sideways, you know, with whatever, whether I'm down 5 pips or up 3 or 4 pips, doesn't matter. I'll look to sell it again right here when it breaks down underneath the low. This is my profit target down here. It wasn't that weak, and even though the daily, weekly, monthly is extremely weak, this trade just didn't work. You know, that's just part of what happens. Dollar yen, the daily trends down, but the weekly and monthly trends up. So looking to buy here at the 10 and 20 day moving average with our counter trend buy signals, pretty high probability trade. Once that happens, you don't really want to sell this one because of how strong it is, but if you did, when it came back up here at this resistance area, you might have gone short, made a little. This one here, it worked. And you can't buy here, even though the weekly and monthly trends up, because you got all this resistance right above it. These fib levels usually contain price, so why take a risk having a 10-15 pip stop if you only have a likely 10 pip profit target? Makes no sense. CAD yen, now this is not that good of a trade, even though it worked. because the weekly and monthly trends down. The price is underneath the hourly, so you're looking to sell it. If you got short right here with your stop above here, you ultimately maybe made 20 pips, and it's extremely weak there. And this is a perfect example of an Elliot two-wave pullback. You wait for the fib levels to get hit after a two-wave, especially after extreme weakness like this. The weekly and monthly trends up, so it's likely to have, a more of a, you want to wait more to get short because the weekly and monthly trends up. You go short right here, and that trade led to about a 40 pip move. Then you have another Elliot two-wave pullback here, which also worked. The Elliot two-wave system, watch the video. Yeah, but it's a wonderful thing. Anytime you have a nice trend down with intensity, which is kind of a little bit less here, but still a moderate intensity, the trades work, even when the weekly monthly trends up. There's a lot more examples in the charts of Elliot two-wave pullbacks, but this was the best example, so I just wanted to show you this one.